The return of Donald Trump to the presidency of the United States sparks debates not only in the political realm but also in financial markets and the world of cryptocurrencies. One hypothesis gaining traction among analysts and enthusiasts is that a new term for Trump could trigger a significant rise in Bitcoin's price. To explore this idea, two key points will be analyzed that could support this phenomenon: the economic and regulatory policies Trump might implement and the narrative of Bitcoin as a safe haven asset in a context of global uncertainty. Impact of economic and regulatory policies. If Trump returns to power, it is likely that he will reinstate his characteristic economic approach, aggressive tax cuts, trade protectionism, and a more lenient stance towards certain financial sectors. These policies could create an environment conducive to Bitcoin strengthening as an investment alternative. First, tax cuts, one of the hallmarks of his previous administration, could stimulate a massive influx of capital into the markets. This excess liquidity, combined with a potential increase in the national deficit, could weaken confidence in the US dollar as a store of value. In a scenario where investors seek assets capable of protecting their purchasing power, Bitcoin would emerge as a prominent option due to its limited supply and detachment from traditional financial systems. Moreover, Trump could take a more favorable approach toward cryptocurrency regulation. During his previous term, although he did not show direct support for Bitcoin, his administration maintained a relatively moderate stance on regulatory matters. In a context where the crypto ecosystem faces growing regulatory pressures, the possibility of a more permissive framework under Trump's leadership could revitalize interest from both institutional and retail investors, thereby driving up Bitcoin's price. Lastly, Trump's protectionist strategy could create political and trade tensions that negatively impact traditional markets. These tensions could act as a catalyst for investors to diversify their portfolios toward alternative assets, with Bitcoin being one of the top choices. Bitcoin as a safe haven amid uncertainty. The possibility of a new Trump term also brings with it a potential increase in geopolitical and economic uncertainty. During his previous presidency, his political decisions often triggered volatility in global markets. Events like the trade war with China and tensions with North Korea led investors to seek safe havens. If Trump adopts a similar approach, Bitcoin could benefit significantly by being perceived as an asset resilient to fluctuations in the traditional financial system. A key factor that could influence this narrative is the growing distrust in centralized institutions, a recurring theme in Trump's rhetoric. By questioning the policies of central banks and international agreements, he could strengthen the idea of Bitcoin as a decentralized and reliable alternative. This could resonate particularly among younger generations of investors, who are more familiar with cryptocurrencies and more willing to explore new ways to preserve and grow their capital. Furthermore, the current global context could amplify Bitcoin's appeal as a safe haven. With the possibility of renewed economic and political conflicts, Bitcoin could solidify its role as a tool to protect against inflation and currency devaluations. Its decentralized nature and ability to operate outside government control make it a unique option in an increasingly uncertain environment. In conclusion, Trump's return to the presidency could create an environment that significantly favors Bitcoin. From economic and regulatory policies to its role in the safe haven narrative, conditions appear aligned for a potential increase in the value of this cryptocurrency. However, as with any hypothesis, it will be crucial to monitor concrete developments and evaluate how his administration's decisions directly affect this emerging market. The narrative of de-dollarization and the rise of Bitcoin. One factor that could gain prominence under a new term for Donald Trump is the narrative of de-dollarization, driven by both domestic policies and changes in the global landscape. Trump has repeatedly criticized the role of the Federal Reserve and expressed interest in a weaker dollar to benefit U.S. exports. If these ideas return to the political agenda, they could have a profound impact on financial markets, fueling interest in Bitcoin as an alternative to the dollar-dominated monetary system. The possibility of de-dollarization is also reinforced by the global context. Various countries, including China and Russia, have actively sought to reduce their dependence on the dollar in international trade. A second term for Trump could intensify these trends due to his protectionist approach and the trade tensions that could arise. In this context, Bitcoin could be seen as a viable option to facilitate global transactions without relying on a centralized fiat currency. Additionally, the growing interest in Bitcoin as a store of value would align with the increasing distrust in traditional financial institutions. During Trump's second term, a narrative could emerge that strengthens the idea that the current financial system needs diversification and the adoption of decentralized technologies like cryptocurrencies. This could accelerate Bitcoin adoption at both the individual and institutional levels. Influence of political and social polarization on Bitcoin. Trump's return to power could also intensify political and social polarization in the United States, a factor that could have significant implications for the Bitcoin market. During his first term, Trump was known for his polarizing style, which mobilized both his supporters and detractors. This kind of social climate could increase uncertainty, leading more people to seek refuge in assets like Bitcoin. Polarization could also impact Bitcoin adoption through the pursuit of financial independence. In an environment where political divisions foster distrust in the government and centralized institutions, cryptocurrencies could gain traction as a tool to protect wealth and maintain financial privacy. This phenomenon could be particularly relevant among younger, tech-savvy communities, who already make up a significant portion of Bitcoin users. On the other hand, social volatility could feed narratives around Bitcoin as a decentralized solution that is not subject to the influence of government policies. The possibility of civil unrest or drastic changes in economic policy could boost the perception of Bitcoin as a resilient asset against the uncertainties of the traditional system. In conclusion, both the narrative of de-dollarization and the intensification of political and social polarization could play an important role in driving up the price of Bitcoin under a new term for Donald Trump. These conditions could solidify the cryptocurrency not only as a safe haven but also as a viable alternative to traditional financial and political systems. The global impact of a second term of Donald Trump on the cryptocurrency ecosystem and Bitcoin adoption. Donald Trump's return to the White House could not only affect the U.S. economy but also have far-reaching implications globally, especially in the realm of cryptocurrencies and, particularly, Bitcoin. As political and economic tensions rise, the role of cryptocurrencies as a tool for financial diversification, safe havens, and economic independence could intensify, with Bitcoin as the leading asset in this space. Geopolitical context and Bitcoin's proliferation. The global geopolitical situation is a crucial factor to consider when assessing the potential impact of a second term for Trump on Bitcoin adoption. During his first term, Trump adopted a relatively isolationist stance in foreign policy, including withdrawing from multilateral agreements like the Paris Agreement, imposing tariffs on Chinese imports, and engaging in tense relations with NATO. While these moves generated diplomatic and trade tensions, they also led to a shift toward alternative solutions outside the control of traditional governments. One of the collateral effects of Trump's aggressive trade policy was the strengthening of alternative reserve currencies, such as gold, and more prominently, Bitcoin. In a world where diplomatic relations became increasingly fragile and national government policies fluctuated drastically, Bitcoin presented itself as a safe alternative beyond governmental restrictions. In recent years, we have seen how various nations have increased their gold reserves, and some, like China and Russia, have actively promoted policies aimed at reducing their reliance on the US dollar. A second term for Trump could escalate these trends due to his protectionist approach and the trade tensions that could arise. In this context, Bitcoin could be perceived as a viable option for facilitating global transactions without relying on a centralized fiat currency. Moreover, the growing interest in Bitcoin as a store of value would align with the increasing distrust in traditional financial institutions. During Trump's term, a narrative could emerge reinforcing the idea that the current financial system needs diversification and the adoption of decentralized technologies like cryptocurrencies. This could accelerate the adoption of Bitcoin both on an individual and institutional level. Trump's economic policies, implications for the cryptocurrency market. One of the most discussed aspects of Trump's presidency was his approach to the U.S. economy. During his first term, he pushed for significant tax cuts, primarily aimed at corporations, seeking to stimulate economic growth and job creation. However, the tax cuts also increased the federal deficit and exacerbated concerns about national debt. If Trump returns to the presidency and adopts similar policies, we could see a continuation of large-scale fiat money creation. This excess liquidity could trigger higher inflation, which traditionally fosters distrust in fiat currencies, further encouraging interest in assets like gold and, of course, Bitcoin. Cryptocurrencies, particularly, would benefit from skepticism around the US dollar and other fiat currencies, as their value is not tied to central bank policies. Additionally, Trump's stance on the cryptocurrency market could be more favorable than that of other presidents. Although the Trump administration didn't show direct support for Bitcoin, it also didn't implement stringent regulations that could have hindered market growth. Compared to other nations considering outright cryptocurrency bans, the environment under Trump could be much more permissive, allowing cryptocurrencies to continue developing and gaining acceptance in the global market. The concept of a government-backed digital currency, such as the central bank digital currencies, CBDC, being considered by several countries, could conflict with Bitcoin's essence. However, resistance to centralized financial systems might encourage more people to invest in decentralized cryptocurrencies. Under a second term of Trump, this scenario could become an increasingly significant reality, as his administration would likely oppose restrictive regulations, creating a space where Bitcoin could thrive. The rise of distrust in traditional institutions. The political and social polarization in the United States, exacerbated by Trump's policies, could also have a secondary effect on the cryptocurrency market. In an environment where a significant portion of the population perceives that traditional institutions are failing to meet their needs, Bitcoin and other cryptocurrencies could be seen as a way to achieve greater financial autonomy. Distrust in central banks, monetary policies, and governments in general could drive more investors to use cryptocurrencies as a form of resistance to centralized economic control. The rise of Generation Z and shifting financial preferences. A key factor that could accelerate Bitcoin adoption is the growing interest in cryptocurrencies among younger generations. Generation Z, in particular, is far more open to exploring new ways to manage money than previous generations. This group has grown up in a world where disruptive technologies, like cryptocurrencies, are part of the everyday landscape, making them more likely to adopt them as a form of managing their capital. As more young people enter the workforce and seek investment alternatives, Bitcoin could become the most attractive option due to its ability to offer financial security in a world full of uncertainty. At the same time, younger generations tend to reject traditional financial systems, which they see as outdated or corrupt. This strengthens Bitcoin's appeal as it represents an alternative financial system that is not subject to the control of governments and large banks. Bitcoin's resilience against economic volatility. One of the most important aspects of Bitcoin is its ability to offer an alternative to traditional fiat currencies, particularly during times of economic and political crises. Under Trump's presidency, which was marked by events such as the trade war with China, instability in markets, and fluctuations in the dollar's value, Bitcoin adoption could rise due to its nature as a hedge against inflation and devaluation of fiat currencies. Investors often seek assets that can retain their value in times of uncertainty, and Bitcoin has proven to be an attractive option in this regard. Its limited supply of 21 million coins makes it a scarce asset, making it an excellent choice for those looking to preserve their wealth over the long term. The future of Bitcoin, outlook for a world under Trump's leadership. As Bitcoin's story continues to unfold, the relationship between Trump's policies, the global economy, and the future of cryptocurrencies will remain a relevant topic. A second term of Trump could create an economic and social environment that favors Bitcoin's growth, both as a safe haven against inflation and as an alternative to traditional financial systems. In conclusion, Donald Trump's potential return to the presidency of the United States could have deep and far-reaching implications for the cryptocurrency market. The de-dollarization narrative, economic uncertainty, the rise of younger generations, and social polarization could converge at a critical moment for Bitcoin, positioning it not only as a safe haven but also as a viable alternative to traditional financial and political systems.